Hi, my name is Mike Pettingell, Senior Vice President of Business Development and Strategy for Vizsla Silver. Vizsla is developing the next world-class silver asset with its Panuco Silver Gold Project down in Mexico. We're a well-capitalized group, nicely listed under the ticker VZLA. I will be making some forward-looking statements today. So the question is, why silver? Silver is a hybrid metal. It's been playing an important role not only in monetary policy, it's a store of value, it's a good hedge against inflation. Ultimately, we see silver playing an incredibly important industrial role, particularly when you look at photovoltaics. It's now counting for almost 15% of the overall demand for the metal. And as you can see here, silver's actually been running a deficit for almost 4 years now. There just isn't the supply coming online to match the overriding demand. In fact, silver supply typically comes from big open pit deposits, largely in South America, as a byproduct. Well, these big open pit projects are becoming increasingly challenging to find, to permit from an environmental perspective, but also the capital hurdle that's required to bring these online is in the billions. In fact, when you look at silver primary, which is exactly what we have at Panuco, Mexico is the largest output of silver primary. In fact, it has been for decades. So when you're looking for silver primary and you're looking to satisfy this global industrial demand, well, Mexico is where you have to look. And that's where Vizsla and its Panuco project really come into play. It's Vizsla's vision to have first silver in 2027 at our Panuco project. And really that would put us in a class of our own to become the world's largest single asset silver primary producer. And we're going to again do that through the organic exploration and development of our Panuco district. Leadership is arguably our most important asset. And so we've got an excellent team here that's really done wonders in the industry, not only in silver and gold, but also in the uranium space. We've got Michael Connor, CEO and director. He founded the company with Craig Perry back in 2018. They partnered up. They transacted on a cobalt deal and then incorporated both Inventa Capital and Vizsla Resources at the time on the same day. Inventa Capital is the private parent umbrella to Vizsla Silver. It's focused on the commodities the world needs for the electrification of the planet. Vizsla Silver, again, being the flagship. Craig Perry, industry veteran, doesn't need much of an introduction. He comes from ISO Energy and NextGen Energy as the CEO and founder. He's a development geologist for Rio Tinto for over 10 years. He's the current chairman of Skeena Resources. Most recently, we added Simon Smirlik to our team as COO. Simon, not a better man for the job, in fact. He's got over 30 plus years stepping down from his role as COO of Ausenco Engineering. And in that role, he built over 42 mines, notably Silvercrest Las Chispas, which is a pretty good example of what we're doing just to the north of us in Mexico. We also have Jesus Velador. He's a PhD in epithermal systems, which is exactly what we have at Panuco. He's worked at every major mining company in and around Mexico. He's a Mexican national, notably First Majestic, and he's got a wealth of experience. Lastly, Eduardo Luna. He joined our board, would have been last October now, stepped down from the board of Wheaton Precious as part of succession planning to join our group. But Eduardo is a Mexican Mining Hall of Fame member. He's president of the Mexican Mining Chamber. He's served senior executive roles at many notable companies, as you can see on this list here: Peñoles, Gold Corp, we talked about Wheaton, Alamos. All of these companies have one thing in common, and it's the San Dimas asset. San Dimas is located about 80 kilometers north of Panuco in Mexico. It's First Majestic's flagship asset, does about 13 million ounces per annum. What we have at Panuco is a direct analog geologically to what they have at San Dimas. The big difference is San Dimas has been producing for almost 150 years commercially, produced almost 1 billion ounces of silver equivalent over that time, whereas Panuco has had 0 years of commercial production. So that's the size of the prize that we're after. So the investment thesis: this is a tier 1 silver development story with tremendous growth potential. So rapidly advancing towards development with significant exploration upside and a quality management team that's growing responsibly. So the fast track production here, we just recently published our maiden PEA. We're working towards feasibility study here in the summer of 2025. That'll be followed by a construction decision, again, to reach first pour in the second half of 2027. We're very well funded with over $100 million of cash in the bank and about $16 million of in-the-money warrants that expire at the end of November here. That'll give us all of the capital requirements to get through our de-risking initiatives that we've got planned for this year, the resource update, as well as the feasibility study. It'll bring us all the way to project financing. And again, de-risking here, that's the key. As we move forward to get project one into production here, we're focused on conversion drilling, really understanding the orientation and geometry of our structures, but also to conduct a test mine. We're fully permitted to conduct a bulk sample test mine program that'll really set us apart in understanding, getting underground, putting our hands on the veins, and decoupling the risk associated with mill to mine. Exploration upside can't be understated. We've grown our land package significantly this year. In fact, we've tripled it so far in 2024 with 2 new districts, one to the north of us, equidistant between San Dimas and our project, our initial contiguous project, and then also added right to the south another meaningful land package. But suffice to say, our main project still has tremendous upside. In fact, where we're focused with project one in the PEA, it accounts for about 9% of the known and sampled veins that we have in the district. We've only mapped about 67% of this district with a tremendous amount of targets remaining, almost 160 drill-ready targets on the map. We're also conducting district-wide geophysics to aid in that targeting. Given we have such a laundry list of targets, it helps prioritize and keep capital in check, right? These are low unit cost exploration methods that we like to employ before we get out there and drill. And to the responsible growth, we are investing locally. It's paramount to us to have the social license to operate in any jurisdiction that you go in, and we put community first. So we've got 5 local ejido groups that cover our district. Ejidos down in Mexico are your local land owning groups. They're not indigenous, but they do hold the surface rights. So although you can get your permit from the federal government, it's actually local ejido groups that allow you to have access and to push your project forward. So that can't be understated, the importance of that social license. And we're also a leader in ESG and sustainability. We've just received for the 3rd year in a row now the national recognition of sustainability. And this is a Mexican government award we're very proud of, and we continue to push that forward with our ideals of regenerative mining. So the project itself, as mentioned, we're located in western Mexico in the state of Sinaloa. We're about an hour drive from the coastal city of Mazatlan. Mazatlan's got about 1 million people, but excellent access to infrastructure. You can see here we've got deep sea ports, international airport, there's rail that runs the coast, and these 2 highways that take you directly to the project. So it's about, again, an hour drive. When you come to site, you stay on the beach, and we drive an hour to get to the tip of our project. Our core storage facilities and accommodations are located in the town of Concordia. About 60,000 people that live in Concordia. Excellent services. And again, this is a historic mining jurisdiction. The discovery at Panuco dates all the way back to the conquistadors, right? So 450, 500 years ago, but it was never operated in a commercial sense or never produced mechanized, right? This is purely optically mined, and so the old timers could never go below the water table, right? That leaves an excellent opportunity for us. This is just a district that suffered fragmented land ownership. And so lots of different historic workings and mines dotted all around this main contiguous package. But it wasn't until Mike Connert, our CEO and team, originally came down and pieced this puzzle together. And now we can explore systematically across these concessions. The existing infrastructure, again, really does support us, not only with what we're doing today in drilling and exploring, but as we look to develop Project One and get permits. Because of the past producing nature of this district, it's brownfields in nature, right? So previously disturbed ground is really preferential to go and look for a permit than going to tap into a new ground with no previous disturbance. So we're really happy about the access to infrastructure. In fact, we always point, we've completed now almost 400,000 meters of drilling in this district, and we've never constructed a single road. That's really quite astonishing. And we've been very successful in our drilling campaigns. We've now outlined one of the world's highest grade, largest undeveloped resource bases. This is a 325 million ounce resource, grading right around 500 grams per ton. 11 structures, they're all open in every direction except for up because they're right at surface. You couldn't ask for anything better. It's basically like trying to develop a mine, or excuse me, develop a warehouse in an industrial park. Mother Nature wants this to be mined. So the PEA. We recently published this in July of this year. This is our maiden PEA on the project. We highlighted NPV, these are US dollars, after tax, an NPV5 of $1.1 billion. This is an after-tax IRR of 86%. And you can see here that production profile early in the mine life really affords a rapid payback of about 9 months, right? And the sensitivities that you see here, you can go up closer to spot. Today we're trading at around 31.80 silver, 26.80 gold. You know, that's going to produce a triple-digit after-tax IRR. But we can go upside all day long and talk about, you know, the beneficial, you know, of commodity price appreciation. But really, let's put our hats on. What is the downside potential? And, you know, we could essentially cut these base case assumptions in half and still show positive economics. So this is a project that's largely insensitive to those commodity price environments. But really, it's that NPV to Capex ratio that puts us into a league of our own here. Low cost, high yield. Over 5 times NPV to Capex. You're challenged to find another group that's got that type of ratio. Even Silvercrest, we're quite comfortable with saying that's one of the premier silver stories in the last decade. It had a 4x on its NPV to Capex. However, that NPV, you know, was significantly lower than what we're producing here at Panuco. So the project itself, again, small postage stamp, about 9% of the known vein strike we have in this district. You can see the resource base. It's just down here in the southwestern corner. Everything's in a very tight package. And again, you've got 2 highways that are bowing around the resource with high tension power that runs right over top of the veins. Again, this is based on a 325 million ounce resource base. This resource was actually, data cutoff was September of 2023. This resource was published in January of this year. Since then, we've completed almost 60,000 meters of additional drilling, largely infill and largely focused right here on Copala. And I'll get into some of that importance as we approach, you know, a resource update here at the back end of this year that's really going to bolster the next updated mine plan that we focus on for the feasibility. But backing up here and just highlighting that the PEA is a snapshot in time. This is conventional mining, conventional processing. We want to keep things very simplified here. So this is long hole primarily. About 85% of the project is long hole, with a small component of drift infill up here at the tip of Copala. It's going to start as a 3,300 ton per day facility. And again, this is simplified processing. So it's whole ore leach, it's essentially crush, grind, and then leach. And then you're left with a Merrill-Crowe process to produce doré, right? So we're producing doré, we're not producing concentrate. So although there's a small base metal component associated with this resource, we're not focused on that. We're only capturing the gold and the silver, in which the split there is about 60% silver and 40% gold. Initial capital outlay for this project, again, these are very attractive numbers, it's about 225 million US. And that's quite conservative. In fact, we've baked in about $40 million worth of contingency here, 20 million for the actual study, and then an owner's contingency of 20 million on top. So we're quite confident. Again, these numbers are coming from not only factored estimates, Lang factored estimates, but also about 65% of budgeted quotes. This is far beyond what your typical PEA will assume. And you know what? That's a good place to highlight our metallurgical test work. We've completed 3 rounds of metallurgical test programs now. We're actually working on our 4th, which is an optimized program to really understand those small triggers that we can pull to identify. We can squeeze a few more percentage points of recovery by changing up the grind size or potentially adding a float circuit down the line in year 4. This is a 10-year mine life. Again, it's a snapshot in time, and that infill work that we've been completing throughout the year should certainly add more to this overall mine plan. So it is world-class silver production, and again, you're coming from the first few years is largely driven by Copala, Cristiano, and the high-grade nature of those structures. You're going to get about 15 million ounces over the life of the project, but again, 20 million ounces in those first few years. That's how we're able to get such a rapid payback off that high-grade material. Now, again, 325 million ounce resource base, 162 million ounces went into this mine plan. There's a lot of room to grow and add more resources, convert more resources into that mineable inventory. And of course, as we march towards feasibility, that is our goal, right? We're targeting a 200 million ounce M&I category for this resource update. For context, right now, the indicated category is sitting at 156 million ounces. And so that infill that we're looking at, here's a snapshot of where some of that infill has really been targeting, and some of the excellent grades that we've been pulling out. Effectively, this blue polygon right in the center of the map is year 1 of production. This red polygon represents year 2. Some of these intercepts, 4 meters true width at almost 9,000 grams per ton. This is adding ounces. Typically in an infill program where you're reducing spacing, you're hoping to get continuity. Not only are we continuing to highlight excellent continuity, but we're showing that we've got improved grade as we reduce that drill spacing. So we are adding ounces and bringing mineralization closer to surface. And that's exactly what's being shown in this green shaded area here. So recent infill, adding ounces, expanding laterally, bringing mineralization closer to surface, effectively making those initial stope shapes that support that rapid payback obsolete. We're pushing out this high-grade profile in the hopes that we can continue to expand and keep that front-end loaded economics heavy, and then we can continue to just march forward and tackle the remaining structures of Napoleon and Pico. So where does this put us in terms of our peer group? Well, if we were in production right now, we would be a top 5 silver producer with bottom quartile AISC, full stop, right? At 15 million ounces and $9.40 all-in sustaining cost, you can see here, that's life of mine. Fresnillo, the world's largest silver miner, is the only group that's got assets with a greater production profile than what we do. And especially when you look at, those first few years, again, that we're hoping to push out and extend, you're over 20 million ounces. This is a meaningful silver producer, but also a precious metals producer as a whole. And the cost base, this can't be understated. It's about 50% less than the average. And this represents 2023 annual production numbers here. So these are materially lower than what we're typically seeing. And again, this is driven by the near surface nature, the limited amount of development and overall infrastructure that we'll have to construct. And of course, the high-grade nature of the mineralization. And so look, when we look at that supply-demand, you can see that there's just not a lot of quality assets to come online. What you're looking at here is on the right side of this line, essentially, the near-term developers that have silver primary, that producing, more than 50% silver, and are producing over 5 million ounces per annum. There's a whole host of smaller silver plays out there, but really, that's not going to do it. You need the bigger projects. You need the big open pit copper projects that can bring on that secondary or byproduct. But it's the silver primary here where you can see there's just a dearth of quality. The average of these remaining assets is about 9 million ounces per annum, where Panuco sits here at almost double that. Yet another point that the industry, the world, for its energy transition, really does need the Panuco project in production. So everything I've talked about really is on developing Project 1. But I've highlighted a few times that Project 1 represents just a small postage stamp in the corner, not only in terms of area, but in terms of coverage of mineralization, known cumulative mineralization. So developing Project 1 is our main focus here, getting into cash flow, and then using that cash flow to support ongoing exploration and development of the rest of this vastly underexplored district. So the key developing objectives here, or milestones you could say, deliver the PEA, which we've done this summer. Ongoing community engagement investment is paramount to receive those permits and have that social license to push your project forward. And also that conversion drilling that's setting us up for that initial reserve delineation. Next online here for the remainder of this year really is to commence permitting process. We'll submit our MIA application here in the coming weeks. We've got a resource update pending by year end. And then we've got this bulk sample test mine program that we're fully permitted for that's going to allow us to open up the mine and again, decouple any risks associated with mine to mill, right? We can look at quite a few cautionary tales as of recently where there wasn't sufficient development or mill feed to feed that hungry mill, or vice versa, the mill had complications and frankly couldn't support the amount of mineralization to meet guidance. What we intend to do is stockpile as much mineralization as possible to really mitigate those risks, right? So we're hoping to have 1 million tons on surface by the time that mill is constructed and ready to be turned on. So that puts us in a really good way to minimize those growing pains. We're advancing the feasibility study currently and hoping to publish that in the summer of 2025. That really should serve, as mentioned, as construction decision. Then give yourself 2 years of construction and commissioning to get into first silver production in the second half of 2027. But we've got all of this exploration upside, right? Tremendous amount. And frankly, exploration is in our DNA. We've now got a really good handle on the structural controls to mineralization in this district with our exploration team led by Dr. Bellador. And so we've got ongoing discovery drilling that's, largely just starting, in fact, in the east. And I'll touch on those targets in a moment. But we've got a host of other low unit cost methods, satellite imagery, TerraSpec data, which is really just a tool that aids in identifying alteration minerals. So you've got a heat source that puts off clays. You can use this TerraSpec to identify those clays and start to build a map of where those heat centers are. And that's where you're going to want to look. We've also made these accretive property acquisitions. And again, that's not for drilling today or even tomorrow. That's down the line once we're in production. It's really a multi-generational pipeline. But as mentioned earlier, we've only mapped about 65, 70% of this district. We're still uncovering historic workings. We're still finding old ligaments that can lead to that structural preparation to find those new targets. And we've also got district-wide airborne that I mentioned earlier to really, again, keep the low unit cost methods before we have to start drilling. Although our drilling costs are very low, in fact, we're spending about 32 cents per ounce discovered in this district, which is industry leading, frankly. That is our biggest component of exploration expenditure, drilling. So if we can really identify those targets and prioritize them before we spend the drilling dollars, it benefits us, it benefits our shareholders, and of course our stakeholders. So the targets, right? When we look at where the PEA mine plan is, it's again this blue ellipse. We've got 11 structures that make it up. They're open in every direction. We still are targeting extensions to open resources. We haven't tested anything at depth. In fact, all of the drill rigs that we've had, up to 10 rigs at one point spinning on the property, all of our rigs have been man portable with a depth extent. So everything's open at depth. Once we're underground, we'll put in some drill slots and we'll start testing that depth potential. But suffice to say, a laundry list of targets within not only our current resource or our current PEA mine plan, but just outboard in what we're calling proximal or near mine targets. These are those targets that have the potential, if there's success, to haul those tons to the centralized facility, right? So these are high priority. Any discovery here has a direct effect, or potentially a direct effect, on that PEA mine plan. But also, we've got distal targets that really could represent Project 2. And that's what we're focused on right now. It takes about 7 years in Mexico to go from discovery to initial production. And, you know, that's on average. Silvercrest followed that perfectly. Mag Silver at their Juanicipio, they bucked that trend. It was almost 14 years, but, you know, they did have a JV with Fresnillo. We're following the timeline of 7 years very well with our initial discovery made here at Napoleon in 2020. 2027 is our estimated first pour. We need to get going on hunting for Project 2 so we can have that development story in queue once we're in production. And the high priority targets that we've outlined are what you see on this map. We've outlined a 10,000 meter program that we're going to initiate here in coming weeks. In fact, we've mobilized 2 rigs now from our infill program to San Dimas Camellia. This is a target that we've been wanting to drill for some time. You've got historic workings. You've got cross-cutting structures where it can really represent a zone of dilation. And we've got that structural preparation in a nice corridor that really does represent an excellent place to drill. We've also got high-grade samples that support our thesis. So very excited to get out and start drill testing these. Again, we're about to drill test them in coming weeks. Expect results to start trickling in December. But beyond that contiguous package, as I've mentioned, we tripled our land package. Panuco contiguous, Panuco 1 is where my cursor is. We've also added the La Garra district, which is, you know, almost twice the size of the original Panuco, and more recently, the contiguous San Enrique claims. These are both carbon copies of what we had at Panuco. La Garra, it's been privately held since the 40s. It's a past producing district. It's never seen a single diamond drill hole into it. We've sent our geology team up and do some reconnaissance, and they've mapped and sampled high-grade structures on surface that are, you know, subvertical, 3-meter wide structures similar to Napoleon. They've mapped and sampled high-grade, 10-meter wide flat-lying structures such as our Copala. So we're very excited about the potential here at La Garra, but again, this is not for tomorrow. This is once we're in production. We don't want to waste shareholder money today, because if we make a discovery here, it's not going to have that complement to the mine plan for Project 1. And Project 1 is really where we're going to get the re-rate potential from. So getting into production, it's the most important thing for a silver developer. San Enrique, similar, past production. Actually, it's more remote. Even though it's closer to our property here, it's more remote than up here at La Garra. Our guys had to camp here when they went to San Enrique, but most of our key structures, Copala, Napoleon, Animas, they're actually trending on to this district. So we're very excited about the potential at San Enrique. We do have some preliminary geophysics that also support our thesis of structures running down onto this newly acquired ground. So again, very excited about this multi-generational pipeline of targets we've acquired. The key catalysts over the next 12 months. We've got bulk sample test mine. I'll reiterate that. It's a 25,000 ton combined sample. We're really only going to focus on Copala because that's where we're going to start mining. And again, that's going to drive the economics. We're also really planning to have the permits in hand following this bulk sample. Therefore, we can just continue mining and stockpiling as we build and develop the mine. We've got our fourth round of metallurgical test work that's ongoing. And again, this is really optimized. We've got excellent recoveries in the mid to low 90s for both metals, but really what we're focused on is getting that grind size right and understanding, are we going to go for a flotation circuit in year 4 that can just squeeze a little bit more metal out of the rock? We've got an updated MRE, that's the mineral resource estimate planned for Q4. And again, we do not have a measured category currently on the books. However, that is our focus to get to that 200 million ounce threshold in M&I. That's really what's going to serve up the feasibility in terms of a reserve base. And again, that feasibility study expecting in the second half of 2025. All of these are the milestones that we highlight, but it's really, in terms of catalysts, in my opinion, it's that ongoing discovery potential. You know, with 43 out of 158 targets, I think that number has grown considerably, being drill tested. There's so much room to grow. And in fact, you know, that's where I frankly see the re-rate in terms of a near-term gap up could come from if we make a discovery out in the east. And again, those targets that I've highlighted here, they're not, you know, 5 to 10 million ounce targets. These are big boy targets where we're looking for 30 to 50 million ounce centers, which we can then expand on. Targets that could warrant their own standalone facility, similar to what we have down here in the southwest corner. So what does it look like? You know, I've highlighted that, you know, as we go from exploration and developer into producer, there's a material re-rate. And this really holds true for all of the silver primary producers. Many of you watching this are probably familiar with the elusive silver premium. And again, that's only afforded once you're de-risked, once you're in production, and of course, if you have significant exposure to silver. In fact, the average producer, you know, is 1.25x a PNAV, where the average developer is trading at below 0.4x. So that's a, you know, over 230% increase in your PNAV multiples as you get into production. Now, you can see on this list, we've got quite a few big names, a lot of these material producers. Where we fit in certainly would fall in line closer to some recent precedent transactions. Most recently was announced Core Mining to acquire Silvercrest. It implied a premium with a PNAV of 1.7 times. Even more so, the Gatos acquisition by First Majestic implied a premium of over 2 times price to NAV. When you're looking at those multiples relative to what we have, that would suggest a $2 to $3 billion valuation, whereas where we're sitting at today is about a $550 million US valuation. This is the re-rate potential that we see moving forward as we de-risk this asset, get into production, and of course, pour first silver. So this is what drives us to get into production over looking to sell it. We're focused on what we can control. We cannot control the commodity price environment. We cannot control a potential acquirer coming in to make a bid. But what we can control is how we spend our capital, the resources that we push forward. And that's exactly what we're doing here, is being judicious with our capital spend, laser focused on getting into production to realize this re-rate for shareholders, being as non-dilutive as possible, because frankly, management, insiders, directors, we hold about 15% of the outstanding shares of the company. So we're allergic to dilution just as much as the next shareholder. So just to bring it back home here, the 3 reasons to own Vizsla. Again, it's that fast track to production to realize that re-rate, right? Again, you're talking a 2x PNAV multiple. You're not going to see that in the gold space. We've got immense exploration upside that, again, could really materially change not only the scope of Project 1, but add a whole new center of mass to double the economics that we have in this vastly underexplored district. And again, significantly undervalued here. We're in a timing on the planet here where we're focused on an energy transition where silver is one of those key metals. In fact, it's one of the metals that really is projected to drive the largest deficit as we move into 2035 and beyond. And with a catalyst-rich environment over the next 8 to 12 months, there's always room to sharpen your pencil and stay ahead of the next news. So, this is what an exploration project that's successful looks like. Now we're taking it into development and ultimately production to realize an excellent re-rate. I hope you join us along this ride. It's going to be fast. So strap in.